And then when you zoom in inside of real estate, especially through the COVID experience, we've seen a consolidation of capital into multifamily and industrial, right? Capital rotated out of office and hospitality, and it's already been rotating out of retail. So all of this capital that wants to be allocated into real estate is now really focusing on multi and industrial. So with that being said, with this massive capital inflow, it's really going to be tough to see a world where prices come down dramatically and there's these huge discount buys, because at the end of the day, there's a lot of people on the sidelines ready to jump into the market with their piles of cash, and that's going to keep asset prices high. So I do think there's going to be good buying opportunities, but I don't think we're going to see the buys of a lifetime like we did coming out of the great financial crisis in 2009, 10, 11, 12.
Okay, great. Thank you for kind of walking through that. It's the first question that's top of mind for investors, like, is now a good time to invest in this space? I'm a firm believer that the fundamentals in this space are still very, very solid. It's where I'm putting my dollars and my family's dollars and encouraging everybody I know to put their dollars. So, thank you for walking through that. Now, I'd be doing a disservice to the audience if I didn't give you an opportunity to at least talk through your most recent book that you just launched that talks about deal structure and some other things like that. So can you share very quickly a little bit about that and what you're doing in that space?
Yeah, absolutely. So just published my second book called Structuring and Raising Debt and Equity for Real Estate. I've got my copy down there. So it seems like you've got your copy nearby.
Yeah, mine here. Yep.
Really cool. So this book has been super exciting to publish, because the first book that we published was The Definitive Guide to Underwriting Multifamily Acquisitions. So much more niche topic, right? It was just focused on multifamily underwriting. Yeah. And it, like you said earlier in the show, it really helped build credibility and build a name for myself and Lone Star in the space. But with a bit more experience in the business, as well as in being an author, we published the second book kind of the right way. Dasha helped a lot with the new book, and
okay.
We're selling at twice the pace. We're doing amazing. It's been a fantastic launch. We're all super proud. I was really nervous about the new book, frankly, because I thought that I had lightning in a bottle with the first one, and that
Sure.
I don't know if I was going to be able to replicate that. So it's been exciting to see the growth. And just as the first book has brought new relationships to us, the second book is doing the same thing. We're able to grow our network, meet new potential partners, meet new investors, have that credibility. So that's kind of a lot about writing the book and the benefits to us. But what's actually in the book is a really straightforward guide on both the debt and the equity side of the capital structure, and not just the nuts and bolts of the structure, but also how to go out and raise that capital and how to interact with lenders. And I spend a good deal of time towards the end of the book talking about investor relationships, whether it be with retail LPs, co-GP partners, fund of funds, and institutional capital, which we have continued to push and grow in that space.